The Age of Easy Money, a story of central banking, market mania, and American families. Welcome to Simple Mindspace, your weekly dose of financial wisdom, millionaire mindset, and the pursuit of financial freedom. Today, we're diving deep into a story that's shaken the world, The Age of Easy Money, a tale of reckless central banking, market manipulation, and the devastating consequences for everyday Americans. Imagine a world where money was cheap, almost free. Imagine a world where the stock market soared, real estate boomed, and corporations raked in record profits. This was the world we lived in for over a decade. A world built on the backs of the Federal Reserve's easy money policies. This isn't just a story about numbers and charts. It's a story about people. The families struggling to make ends meet, the workers losing their jobs, the investors caught in a frenzy of speculation, and the central bankers who pulled the levers of our economic destiny. The Great Recession and the birth of easy money. The story begins in 2008 with the collapse of the housing market and the global financial crisis. The world teetered on the brink of economic collapse. Banks froze lending, credit markets seized up, and fear gripped the nation. Enter the Federal Reserve, the central bank of the United States, entrusted with keeping the economy stable. They had a choice: let the system implode or intervene with unprecedented measures. They chose the latter. The Fed slashed interest rates to near zero, a move unheard of in decades. They initiated quantitative easing, QE, a radical policy that involved injecting trillions of dollars into the financial system by buying up government bonds and mortgage-backed securities. The idea was to provide liquidity, to get the money flowing again, and to prevent a catastrophic depression. It worked. The financial crisis was averted, but it came at a cost: the unintended consequences of easy money. The Fed's easy money policies, intended to be a temporary fix, morphed into a long-term strategy. They kept interest rates low and continued to pump money into the economy for years. This had several unintended consequences. Market mania. Cheap money fueled a stock market boom, pushing prices to record highs. Companies took on more debt, fueled by low borrowing costs, and bought back their own stock, further inflating valuations. The rise of shadow banking. A shadow banking system emerged, a network of non-bank financial institutions like hedge funds and asset management companies that were largely unregulated. This system became increasingly risky and vulnerable. The widening wealth gap. The benefits of the easy money policies flowed disproportionately to the wealthy. The stock market rally enriched investors, while many Americans struggled with stagnant wages and rising living costs. Moral hazard. The Fed's repeated interventions in the markets created a sense of moral hazard, where investors felt they could take on excessive risk with the expectation of a government bailout if things went wrong. The pandemic and the bazooka. In 2020, the world faced a new crisis, the COVID-19 pandemic. The economy shut down, millions lost their jobs, and uncertainty gripped the globe. The Fed once again intervened with a massive injection of liquidity, a bazooka-sized response to a global emergency. They cut rates to zero, launched new lending programs, and bought trillions of dollars in bonds, including corporate debt. This unprecedented response helped stabilize the financial system, but it also pushed the easy money experiment to its limits. The inflation conundrum. The Fed's actions, combined with massive government stimulus, created a perfect storm for inflation. Prices started to rise rapidly, driven by supply chain disruptions, surging demand, and the sheer volume of money sloshing through the economy. The Fed's initial response was to dismiss the inflation surge as transitory, arguing that it was temporary and would soon fade away. This proved to be a miscalculation. As inflation soared, the Fed finally began to shift gears, raising interest rates to try and tame the runaway prices. This move, however, risked causing a recession. The road ahead, uncertain and painful. The Fed's tightening cycle has already had a significant impact on the economy, leading to turmoil in the stock market, a slowdown in the housing market, and a sharp decline in the crypto market. The full consequences of the Fed's actions are still unfolding, but one thing is clear: the era of easy money is over. We're entering a new world, one where interest rates are higher, borrowing costs are rising, and the economy is slowing down. The Fed is facing a delicate balancing act, trying to control inflation without triggering a recession. It's a tough task, and the consequences of their choices will be felt by every American. Lessons learned and a path forward. The age of easy money has been a cautionary tale. It has shown us the risks of reckless central banking, the dangers of market manipulation, and the importance of sustainable economic growth. We must learn from the mistakes of the past and work towards a more balanced and equitable economic future. This will require fiscal responsibility. The government must play a responsible role in managing the economy, avoiding excessive spending and tax cuts that fuel inequality. Sound monetary policy. The Fed must maintain its independence and use its tools to control inflation and promote long-term economic stability. We need stronger financial regulations to prevent risky behavior in the banking system and the shadow banking system. Investment in infrastructure and education. The government must invest in infrastructure and education to create a more productive and competitive economy. Income inequality. We must address the growing income inequality and ensure that the benefits of economic growth are shared more broadly. The road ahead is uncertain, but we must navigate it with wisdom, foresight, and a commitment to a more just and sustainable economy. The age of easy money may be over, but the age of opportunity is still before us. Subscribe, like, and share. This is just a glimpse into the complex story of the age of easy money. If you found this episode insightful, please subscribe to Simple Mind Space, like this episode, and share it with your friends. Together, let's learn, grow, and take control of our financial futures.